Cat. Please make sure you guys do me a favor and subscribe to my channel. As always, I post Sundays and Wednesdays. So let's get into the macroeconomic outlook for this week, and then we'll get into the charts and we'll talk about my call last on Wednesday, which was completely wrong. So starting out this week here, the only thing that I'm paying attention to will be initial jobless claims on Thursday and PPI on Friday. And then we'll have FOMC the next week. So not this coming week, but the following week. So generally, in the month of December, the 2 weeks leading up to Christmas are historically the best 2 weeks. This week is flat to red generally. So that is something to note after we've had a pretty substantial rally. So the S&P 500 now is hanging out. We can clear some of these lines out, above purple. So it can hang out above purple for a little bit, but this is where we're at, right? The closer we get to red, the better the percentage, the probability that price pulls back to the mean, right, which is right here. But it can hang out around the purple and even above the purple for a little while. As you can see, we did something like that down here. So that is something to pay attention to. As far as this week, we are at this major downtrend line. This has been all over everywhere, basically Twitter. One thing to note is the volume, right? See, the volume for this week was actually pretty decent, but if you go back to these, look at the volume here. It's a lot lower. Here was a good volume. So really, in my opinion, you need to watch basically last week candle highs and candle lows as really your gauge, whether we break higher or lower. If we break above highs, we do have a shot to get in this gap at 420, which would be a pretty remarkable push, and I think we would be due for a pullback. But if we break below, we could flush right down here into 385 pretty quick, which would be about a $7 move below the lows. So it's one of those things you just really got to play price action. We're at a really tough inflection point. Price could move either way, and really we have no idea of predicting that. It's basically just, well, does the trend line hold? Does the downtrend hold? VIX is now below 20. This has been the best performing strategy all year. Buy when VIX is above 30, sell when VIX is below 20. We're now below 20. Okay, so does this continue to work? That's a question really that we're just waiting to see on. But I do tend to think this pivot high, 390, I think this area probably holds at least into year end. We could start reevaluating things as we get into early next year, into 2023. But it's really just all based on the economy and what happens there, right? Stocks have never bottomed before a recession has started. We just had a GDP print that was positive 2.7 or 2.9%. So it hasn't quite hit us yet. We haven't seen companies really mark down. We need to see a company like Apple, guide down. That will be, in my opinion, let's talk about Apple. This is the chart that really everyone needs to pay attention to. So if we pull up the weekly chart here, we can see what Apple looks like. So this is what it looks like for now. In order to get some sort of capitulation, one would probably think that it would have to break below this trend line for the overall markets to be confident that the bear market has ended. Although, as far as volume goes, this thing has been holding up, right? Pull up a monthly chart. Looks just like it's consolidating. Price is getting tighter. But another one of those charts where you really just have to play the price action, because if this thing does lose this low, 134, the algos will kick in and this thing will slide much lower. Probably 110s, especially if they come out and report any news, maybe 115, based off their China plant and production volumes, which is going to impact overall sales, right? So moving on, let's move into our sectors, starting with real estate. We'll pull up a weekly chart. We have real estate here working really nicely in this rising wedge. I don't believe real estate is done. This looks a lot like this, right? Or it'd be something like that. And look at this, is only leg 1, this is leg 2. We're hiking rates at a historic pace. So I tend to believe this has another leg lower. And again, the last week's candle print is going to be our guide for these moves lower. You watch for the breaks of these lows. If the lows break, the algos, the sell volume will start to pick up. So that's going to be the same on all of these names. Energy continues to remain strong. Actually, kind of looks like it's flagging a little bit. However, if we do enter into a recession, energy will come down with the rest. And it'll probably base around the 70s or maybe even the 60s if it's depending on the recession. So even if maybe we don't get the recession, who knows? Moving on to semis, another one. Thus far, these have been good technical cooldowns. As you can see, we were down here. RSI was 33. Now, this is a weekly chart. RSI is back up to 52, right? So we're back in the middle. Anything can happen from here. I don't really have much to say on that one. Materials, actually, we talked about this Sunday about materials and China reopening. China had some good news. They were starting to slow the COVID protocols. They were trying to slowly phase them out. Although it's probably going to take them months to phase it out. I said you would see commodities rally off that, as they're one of the biggest hubs for materials. So as you can see, we've had a nice rally. This thing, as long as the China theme, the reopening theme, continues to be in play, materials will head higher. Moving on to tech. One of the weaker bounces off the bottoms out of everything. However, this is seasonally strong period for tech, so this could have more upside. It has not quite hit the trend. I guess if you draw the trend from the top, we can see where it's at. It's close to it, but it's not quite there. Industrials, really nice push off the bottom. Did not expect this. And that says a lot. This chart looks a lot like the Dow. The Dow has been strong, very strong. And you can see here that's being shown in industrials. Communications, another one trying to form a little short-term bottom. Otherwise, it's just trying to cool off technicals, in my opinion. But the risk reward on this is high, right? So, wow, it is actually below, just barely above IPO price. Quite interesting. Moving on here to software. Another one of those are, at this point, just start dollar cost averaging into some of these names. It could have to get, this is a big broadening formation, right? So could have to get all the way down there, but something like that. Moving on to utilities, another one that's just chipping away. Pretty nice bounce off the lows here, and it's back over COVID highs, so it's a good place to be. Healthcare continues to be strong. Healthcare inflation, although it was cooling, we are still seeing prices rise in a lot of different areas. So this thing looks like it wants to take out highs, if you want my honest opinion. So pay attention to that. XLY holding our trend line for now. However, you don't love how long this is hanging out here. That's not exactly something that I'd be super happy about if I was long this, which I'm not. Moving on to XLP, The breakout continues. Almost hitting our purple line, which we said it could hit a couple weeks back. We said watch for this purple line, 78. It's a little below the prior high, but it probably gets a touch. And that so far is up $3-4 from there. So that's all I have for this week, guys. Thanks for viewing. Thanks for watching, subscribing. As always, I'll be back in more videos. Peace.